ExamPrep.School. North Carolina Adjuster Exam Code InsNC-CIAdj26. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Commercial insurance coverages, loss report, loss damage valuation, North Carolina statutes and regulations, pertinent to adjusters, personal auto policy, personal insurance coverages, terms and concepts. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which term is used to denote a risk category involving only potential for loss or no loss without any possibility of financial gain? A. Exposure to potential loss or no loss without any possibility of financial gain. B. Risk scenario that can result in either financial gain or financial loss. C. Uncertain event that may yield a profit or may prevent future economic benefits. D. Everyday exposure stemming from operational activities of a business entity. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The correct answer is the one that describes a risk with only loss or no loss outcomes and no chance of gain, matching the definition of pure risk. Reason B is not correct. This describes speculative risk, which includes possible gain as well as loss outcomes. Reason C is not correct. This refers to events that may produce profit, which is characteristic of speculative risk rather than pure risk. Reason D is not correct. This describes routine business exposures, not the abstract concept of pure risk with no gain potential. Question 2. Which choice best distinguishes a peril from a hazard in insurance terminology? A. A hazard is the actual event resulting in damage, whereas a peril is any condition raising the probability of loss. B. A peril is the direct cause of loss. A hazard is a circumstance or condition that increases loss frequency or severity. C. A hazard is any insured risk expressly named in a policy. A peril is an unnamed potential cause of loss. D. A peril estimates the monetary value of loss. A hazard quantifies the probability of claim payment. The correct answer is B. The correct answer is the one that defines peril as the event causing loss and hazard as the condition that heightens the likelihood or severity of that loss. Reason A is not correct. This reverses the definitions by calling the event a hazard and the condition a peril, which is incorrect. Reason C is not correct. This mischaracterizes hazards as named policy items and perils as unnamed causes, conflicting with standard definitions. Reason D is not correct. This confuses peril with valuation and hazard with probability measures, which does not align with the true meanings. Question 3. An applicant for homeowners insurance certifies that the recent electrical upgrades complied with code, but knowingly bypassed safety protocols to reduce renovation costs. In underwriting this application, which type of hazard is most evident? A. An applicant's deliberate dishonesty to secure favorable terms. B. Exposure to loss from deteriorated or defective property components. C. Risk arising from the insured's general carelessness or indifference. D. Potential loss associated with location-specific exposures like floods. The correct answer is A. The correct answer describes an intentional misrepresentation by the insured to obtain advantageous underwriting terms, which is characteristic of a moral hazard. Reason B is not correct. Describes a physical hazard related to property condition rather than insured behavior. Reason C is not correct. Reflects a morale hazard involving indifference, not an intentional act to deceive. Reason D is not correct. Refers to environmental exposure hazards, not insured misconduct for gain. Question 4. Which of the following is not a standard element found on the declarations page of an insurance policy? A. Named insured and mailing addresses. B. Deductible amount. C. Policy limits. D. Insuring agreement. The correct answer is D. The declarations page summarizes key policy specifics, such as the named insured and address, policy period, coverage limits, deductibles, and premium, while the insuring agreement is contained in the policy form section, not on the declarations page. Reason A is not correct. Displays the named insured and mailing address are core to the declarations page. Reason B is not correct. Shows the deductible amount, which is routinely listed to define the insured's share of loss. Reason C is not correct. Lists policy limits that specify maximum insured liability and appear on the declarations page. Question 5. A homeowner files a claim under a homeowner's insurance policy after hail damages the roof. The policy's insuring agreement outlines the insurer's promise to the insured. Under this agreement, what is the insurer's primary obligation? A. Defend the insured against third-party liability suits beyond policy limits. B. Indemnify the insured for covered losses up to the policy limit. C. Refund unearned premiums if the policy is canceled early. D. Cover the fees of the independent adjuster inspecting the damage. The correct answer is B. The insuring agreement establishes the insurer's commitment to indemnify the insured for covered losses subject to policy limits. Defense obligations and premium refunds arise elsewhere in the policy. Reason A is not correct. The promise to defend against liability suits appears in liability policies, not in a property insuring agreement. Reason C is not correct. Unearned premium refunds are handled in cancellation and premium provisions, not in the insuring agreement. Reason D is not correct. Payment of adjuster fees is part of claim handling procedures, not the core promise in the insuring agreement. Question 6. Which of the following definitions best describes actual cash value, ACV, under the principle of indemnity in property insurance? A. Fair market value of the property immediately before the loss. B. Replacement cost of the property without deduction for depreciation. C. Replacement cost of the property less depreciation. D. Cost to repair the property less applicable deductibles. The correct answer is C. The correct answer reflects the accepted ACV formula, where the insurer indemnifies the insured for the replacement cost minus depreciation, ensuring no profit and adherence to the indemnity principle. Reason A is not correct. Fair market value may differ from policy terms, which use replacement cost less depreciation rather than market fluctuations. Reason B is not correct. Replacement cost without depreciation would over-indemnify the insured and violate the principle of indemnity. Reason D is not correct. Repair cost less deductibles does not reflect total property value under an ACV basis and misapplies deductibles. Question 7. A property owner enters into a valid contract on March 1st to sell a commercial building, with closing set for April 1st. On March 20th, before closing, the building is destroyed by fire. Which parties had an insurable interest in the building at the time of loss? A. Only the seller retained insurable interest because legal title had not passed. B. Only the buyer held insurable interest based on equitable title. C. Both the seller and the buyer possessed insurable interest at the time of loss. D. The mortgage lender held the primary insurable interest for its financial stake. The correct answer is C. Both the seller and the buyer have insurable interest at the time of loss. The seller retains legal title until closing, while the buyer's equitable interest under a binding contract also qualifies. Reason A is not correct. This is incorrect because, although legal title remains with the seller, the buyer's equitable interest under the contract also creates insurable interest. Reason B is not correct. This is incorrect because the seller also maintains a legal interest until the contract is closed, so both parties have interest. Reason D is not correct. This is incorrect because the lender's interest is protected only if named on the policy, and it does not supersede the seller's or buyer's interests. Question 8. Which of the following perils is specifically named in the Standard Fire Policy SFP? A. Internal explosion. B. Lightning. C. Smoke damage. D. Civil commotion. The correct answer is B. The Standard Fire Policy names only two perils. Fire and lightning, so lightning is the only named peril among the options. Reason A is not correct. Internal explosion is an extended peril under other policies but is not named in the Standard Fire Policy. Reason C is not correct. Smoke damage is not a separate named peril under the Standard Fire Policy. Reason D is not correct. Civil commotion is excluded from the named perils in the Standard Fire Policy. Question 9. Under the Concealment and Fraud Clause of the Standard Fire Policy, what is the effect if the insured knowingly misrepresents a material fact on the application? A. Policy remains in effect but claim is denied. B. The policy is void from its inception. C. Coverage continues while premium is refunded. D. Policy is canceled after notice with pro rata premium return. The correct answer is B. The Concealment and Fraud Clause voids the policy from inception if the insured intentionally misstates or conceals a material fact. Reason A is not correct. Knowing misrepresentation does not merely deny the claim, it voids the entire policy from inception. Reason C is not correct. Coverage is not maintained when material misrepresentation is intentional. The policy is voided entirely. Reason D is not correct. There is no cancellation procedure with notice intentional fraud, voids the policy from inception. Question 10. After a fire loss to a warehouse under a standard fire policy, the insurer and insured cannot agree on the amount of loss. The insured invokes the appraisal clause. What is the proper next step under that clause? A. Each party appoints an umpire directly without selecting separate appraisers. B. Insured appoints an umpire and insurer appoints an appraiser to determine the loss amount. C. Insurer establishes the loss amount and appraisal is bypassed. D. Each party selects a qualified appraiser, and if those appraisers cannot agree, they jointly select an umpire. The correct answer is D. The appraisal clause requires each party to appoint its own competent appraiser, and if those appraisers cannot agree on the loss, they must jointly appoint a neutral umpire to resolve the dispute. Reason A is not correct. The clause first calls for each party to name an appraiser rather than jumping directly to selecting an umpire. Reason B is not correct. Both parties must select appraisers. An umpire is only appointed if those appraisers disagree, not as a direct party appointment. Reason C is not correct. The insurer cannot bypass appraisal by unilaterally setting loss amounts. Appraisal is a binding process. Question 11. An insured's dwelling has been vacant for 2 months due to renovation. The insured purchases a vacancy permit endorsement. How does this endorsement impact coverage under the fire policy? A. Full policy coverage continues as if occupied, subject to the permit's increased premium and conditions. B. Coverage remains limited to basic named perils and does not cover fire loss. C. All perils are restored without any surcharge or condition despite vacancy. D. Vandalism and theft coverage is automatically added to compensate for vacancy exposure. The correct answer is A. A vacancy permit reinstates full coverage for the specified property despite vacancy. but the insured must comply with any special conditions and pay the additional premium required by the endorsement. Reason B is not correct. The vacancy permit does not restrict coverage to basic perils. It restores policy coverage subject to its terms. Reason C is not correct. Even with a permit, an increased premium and compliance with conditions are required. Coverage isn't automatic without surcharge. Reason D is not correct. Vandalism and theft coverage is not automatically added by a vacancy permit. It simply allows existing coverage to remain in force with conditions. Question 12. Under the dwelling property 1DP1 basic form, which of the following perils is covered without the need for additional endorsements? A. Earthquake. B. Weight of ice, snow, or sleet. C. Internal explosion. D. Vandalism or malicious mischief. The correct answer is C. This option is covered because the DP1 basic form names only fire, lightning, and internal explosion as covered perils without endorsements. Reason A is not correct. That peril is excluded and would require a separate earth movement endorsement. Reason B is not correct. That peril appears in the DP2 broad form, but is not in DP1 by default. Reason D is not correct. That peril requires a vandalism and malicious mischief endorsement and is not included in DP1 basic form. Question 13. Which of the following perils is not covered as a named peril under the Dwelling Property 2, DP2, broad form? A. Accidental discharge or overflow of water from within a plumbing system. B. Weight of ice, snow, or sleet. C. Collapse of a building structure. D. Faulty workmanship resulting in mold growth. The correct answer is D. The DP2 broad form includes water discharge, weight of ice, snow, or sleet, and collapse as named perils, but losses from faulty workmanship and resulting mold are specifically excluded. Reason A is not correct. That peril is explicitly listed as a named peril under DP2. Reason B is not correct. That peril is included in the DP2 broad form coverage. Reason C is not correct. Collapse is a named peril in the DP2 broad form. Question 14. Under Section 1 of the Dwelling Property 3, DP3, Special Form Policy, which of the following perils is covered without any additional endorsements? A. Weight of ice, snow, or sleet. B. Damage from power failure off the insured premises. C. Earth movement such as an earthquake. D. War or military action. The correct answer is A. The DP3 special form is open peril for Section 1, and it covers weight of ice, snow, or sleet. The other listed perils are among the standard exclusions. Reason B is not correct. Power failures occurring off the premises are a standard exclusion under DP3. Reason C is not correct. Earth movement perils are explicitly excluded from Section 1 under DP3. Reason D is not correct. War or military action losses are a standard exclusion under the DP3 special form. Question 15. A homeowner has a dwelling property DP3 policy with a coverage A limit of $200,000. The policy automatically sets coverage B at the standard percentage of coverage A. What is the coverage B limit? A. $10,000. B. $30,000. C. $20,000. D. $40,000. The correct answer is C. This dwelling form automatically provides coverage B at 10% of the coverage A limit, so 10% multiplied by $200,000 equals $20,000. Reason A is not correct. This reflects 5% of the coverage A limit, but the standard dwelling form uses 10%. Reason B is not correct. This reflects 15% of the coverage A limit, exceeding the standard 10%. Reason D is not correct. This reflects 20% of the coverage A limit, which applies to other coverages, not coverage B. Question 16. A homeowner holds a DP2 policy with a coverage A limit of $60,000. The insured rents a detached unit for $1,200 per month. A covered windstorm makes the rental uninhabitable for 45 days. How much will the insurer pay under coverage D for fair rental value? A. $600. B. $1,200. C. $1,800. D. $2,400. The correct answer is C. Coverage D covers fair rental value during the period of loss. 45 days equals 1.5 months, so 1.5 multiplied by $1,200 equals $1,800, which is within the automatic limit of 20% of coverage A, $12,000. Reason A is not correct. This reflects half a month's rent, but the rental was uninhabitable for 1.5 months. Reason B is not correct. This reflects 1 month's rent, but does not account for the additional half month. Reason D is not correct. This reflects 2 months of lost rent, exceeding the actual uninhabitable period. Question 17. Which statement best describes the primary difference between an HO2 and an HO3 homeowner's policy form regarding dwelling coverage? A. HO3 provides named peril coverage for the dwelling, while HO2 provides open peril coverage. B. HO2 covers losses only from specifically named perils, while HO3 covers all dwelling losses not explicitly excluded. C. HO2 covers dwelling losses on an actual cash value basis, whereas HO3 provides replacement cost for dwellings subject to coinsurance. D. HO3 extends personal property coverage on an open peril basis, while HO2 limits it to named perils. The correct answer is B. The correct answer is that HO2 is a named peril form, covering only listed causes of loss, whereas HO3 is an open peril form for the dwelling and covers all loss causes except those excluded. Reason A is not correct. That description reverses the coverage types and is not how the two forms differ. Reason C is not correct. This option confuses settlement basis with peril scope and is not the primary distinction. Reason D is not correct. This statement addresses personal property rather than the dwelling peril scope distinction. Question 18. Which feature uniquely distinguishes the HO5 comprehensive homeowners policy from the HO3 form in property coverage? A. Open peril coverage for both dwelling and personal property. B. Scheduled personal property endorsement for high-value items included by default. C. Replacement cost settlement for personal property without a coinsurance requirement. D. Guaranteed replacement cost coverage for the dwelling structure. The correct answer is A. The correct answer is that the HO5 form provides open peril coverage for both the dwelling and personal property, whereas the HO3 form offers open peril coverage only for the dwelling and named perils for personal property. Reason B is not correct. A scheduled personal property endorsement is an additional provision, not a default feature of HO5. Reason C is not correct. The HO5 form still applies the standard coinsurance requirement, so this statement is incorrect. Reason D is not correct. HO5 does not provide guaranteed replacement cost. It follows standard policy limits and coinsurance. Question 19. Under coverage. A of a homeowner's policy, replacement cost coverage for the dwelling is provided only if which requirement is met? A. The insured has a primary residence occupancy certificate issued by a local authority. B. The insured submits a detailed estimate from a licensed contractor before the loss. C. Replacement is completed within 1 year of the loss. D. The dwelling is insured to at least 80% of its full replacement cost. correct answer is D. The correct answer is that the insurer will pay replacement cost for dwelling losses only when the dwelling is insured for at least 80% of its full replacement cost, in accordance with the policy's coinsurance requirement. Reason A is not correct. A residence certificate is unrelated to the policy's replacement cost condition. Reason B is not correct. Submitting a contractor's estimate before loss does not satisfy the coinsurance requirement. Reason C is not correct. Completion timing affects payment timing, but is not the condition for replacement cost eligibility. Question 20. An insured carries an HO3 policy. The adjuster notes these structures on the described location: a detached tool shed rented to a neighbor for personal storage, a privacy fence enclosing the yard, a detached garage housing the insured's vehicles, and a gazebo where a local book club meets weekly. Under coverage B, which of these structures is excluded from coverage? A. Privacy fence enclosing the yard. B. Detached tool shed rented to a neighbor for personal storage. C. Detached garage housing the insured's vehicles. D. Gazebo used by a local book club. The correct answer is B. The shed rented to the neighbor is excluded because coverage B excludes structures rented to others for any purpose. The fence, garage, and gazebo are covered as other structures used for the insured's personal use. Reason A is not correct. Fences are considered covered other structures unless specifically excluded, so the privacy fence is eligible under coverage B. Reason C is not correct. A detached garage used solely by the insured for personal vehicles is covered under coverage B. Reason D is not correct. A gazebo used by a community group without rental income does not violate coverage B and remains covered. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.